All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another edition of Current Market Insights. I'm your host, Ciaran O'Brien, and with me is my good friend, Mr. Peter O'Malley. Peter.
Ciaran, g'day. How you going?
I'm going well. Good to see you, Peter. I want to jump in today's episode, and there's been quite a bit to talk about, I think, all sadly, in our case, all sadly centred around political announcements, political decisions, but as they relate to property in Sydney. I want to start the discussion today by talking about the federal government's home ownership changes. They've made a range of announcements as part of their election as to ways that they were going to assist people to get into the housing market. One of the things that they talked about was reducing the amount of deposit required by first-time buyers to get into the market without incurring a lender's mortgage insurance or LMI penalty. Now, when it was first announced, this policy sounded relatively tame and more as a bit of a popularity point, more so than a really well fleshed out policy. But now the government's come out, made some changes, and I guess in some ways tried to really beef up what this actually means. So to kick us off, what do you understand about the policy, and then what are the more recent kind of conversation points around it that give it the focus we want to talk about today?
Well, look, the Herald, the ABC rather, reported it this way, Ciaran. They said the scheme, the first home buyer guarantee, would allow people to buy a property, their first property, with a 5% deposit and avoid paying lender's mortgage insurance, as you've just outlined. Housing Minister Claire O'Neil said the scheme would allow first home buyers to be paying down their own mortgage rather than rent sooner. That's perhaps a 7 or 8 year period where they're choosing to pay off their own mortgage rather than someone else's, and that's a really good thing. The government is citing Treasury Department modelling, which suggests the total impact on house prices will be around 0.5% increase after 6 years. Don't know how Treasury got to that level, Ciaran, but there you go. Experts go on to say that the prices will actually be pushed up a lot higher than that, particularly in the first couple of years after the scheme is introduced, given it will be stimulus to the market, the property market.
So a couple of things to unpack there. First and foremost, for people that don't understand or don't know much about LMI, what exactly is LMI and what kind of impact does it really have on someone who's trying to put together a deposit for a property?
Yeah, look, it's often the difference between able to enter the market and not be able to enter the market for a lot of young people.
Right.
So if you can't get a deposit of a certain size, the mortgage lender will say to the borrower, yes, we're prepared to lend you that money. We can see that your earnings are likely to improve as your career progresses. But based on your existing earnings, we can see that you can afford to pay the property back. However, you don't have a large enough deposit for us just to give you the money straight out. So therefore, we'd like some mortgage lenders insurance in place here to protect us should the worst happen and you fall over in terms of repayment. That can be a significant sum of money, and that can be the difference where you can have a first home buyer who scraped together 5 or 10% deposit. If they were, in theory, paying a mortgage instead of paying rent, they could make ends meet, but they can't quite get to that lender's mortgage insurance to allow them to enter the marketplace.
Okay, so as a practical example, let's say someone had saved $50,000 for a deposit and they thought this might be enough to make an offer on a property, but they haven't met the 20% threshold or whatever the LVR is that's being sought at the time. And theoretically then that lender's mortgage insurance comes off whatever deposit amount they might have. So all of a sudden they're even shorter from where they need to be. Is that the concept?
Oh, well, they wouldn't get the loan under the current structure.
They just wouldn't get it at all, yeah.
So going forward, the government will say to approved borrowers, we can see that based on your career earnings, where you're going to, the loan amount that you're looking to take out, that you're a good and safe bet. So the government will step in and make sure that you don't have to pay mortgage insurance.
Okay. So I guess a very cursory level sounds like a great incentive, right? A way for the government to stimulate younger couples, young singles, whatever, into the property market. You mentioned the Treasury modelling suggests that property prices will increase 0.5% over 6 years off the back of this. Given that Sydney property increases, more than that sometimes in the month, how do you think Treasury actually came to this figure? And realistically, based on your experience with other incentive schemes over the years that you've been in real estate, what do you think the actual impact is likely to be here?
Yeah, look, when it comes to Treasury's forecast there, I don't think you can take it with a pinch of salt. That's ridiculous.
Yeah.
It really is. And
the property market literally could go up that much by the time we finish this recording.
Indeed. Well, on the announcement, or certainly the introduction come October 2025, that's quite possible. That's right.
Yeah.
So this policy feeds the demand side in the housing market further.
Yep.
And history tells us that whenever the governments throw an incentive into the demand side of the equation, the market rises by more than the benefit on offer.
Yeah.
So in very basic terms, ones that most people can remember, in 2008 when the world was in meltdown, the Rudd government introduced, I think it was $7,000 bonus for first home buyers on homes under $500,000.
Yep.
And almost overnight, the market rose. During the GFC, when Wall Street nearly completely imploded, Sydney property prices under $500,000 rose by $14,000, $21,000 as first home buyers chased a $7,000 incentive.
Yeah.
So for Treasury to say that this would only impact property prices by 0.5% over 6 years, I think what they're really ignoring there is the unintended consequences. And this is what bureaucrats and Treasury departments are known for, which is modelling where they change one thing, believing that nothing else in the model will change based on the new policy other than, people right at the point of wanting lenders' mortgage insurance, and everything will be modelled from there. But when you change the rules, you change behaviours.
Yeah.
And if you offer an incentive like this, you will change the psychology of first home buyers, and you will end up creating which others can decide whether it's good or bad. I'm just speaking purely clinically about it. You will create a surge of demand with this policy here.
Yeah, and I can't help but wonder if the government's also made these models or predicated them on this false belief they have that they're delivering 1.25 million new homes, over this short period of time, and that, of course, their supply efforts are going to match the demand that's increased through this. I mean, the demand's already very high, and we have that issue across Sydney in general. Supply is not coming fast enough, and, I agree with you. I can't help but think that they've said, well, under our proposal, this will be fine because we're building millions more houses. But, of course, the reality is so different from the messaging.
Yeah, if there's weakness in the Sydney property market or the inner city market at the moment, it is at the bottom end or the lower end of pricing. And what this is designed to do, and the Housing Minister Claire O'Neil says as much in her statement there, that it's a 7 or 8 year period where a first home buyer is choosing to pay off their own mortgage rather than someone else's, i.e. renting. So this is an attempt to rein in the rental market as well, which hasn't really been discussed in too much of the media commentary about this, is that if you can get young people saying rents are too high, I'm better off buying my own property, you will have the bottom end of the market come alive as first home buyers make that switch from being a tenant to an owner-occupier.
Yeah, which, as you say, theoretically should bring down rental demand. My final question on this topic then, Peter, the Herald, who also wrote an article about this, mentioned that the scheme itself, unlike previous iterations of government schemes in this space, will have no caps on the number of applicants. That said, one of the suggestions that's kind of being made by some parties who may have vested interests against the government making this change have said that though there are no kind of functional caps, there will be caps in reality because the initial surge will see people priced out of the then 5% requirement for entry anyway. Do you think it's going to be, or do you think there's likely to be a scenario where there's so much demand and so much interest and such a surge in prices that all of a sudden people can't even get to the 5% required in this case?
I think if the market became that unhinged, they would have to step in and slow it down in that scenario.
So one of the things they've done here is lifted the caps on there's no cap on number of applicants, but there is a ceiling on how much you can, what the price that you can go to. And I think it's 1.5 million.
It's 1.5 million in Sydney, but income limits on one's eligibility to access the scheme has also been removed.
Right. So they could implement income limits, or they could implement.
So let's say you don't own
ceiling.
you don't own a property.
Yep.
And for good luck to you, for whatever reason you've got a $300,000 or a $500,000 job. You can claim this incentive.
Does that, to me, that seems like, again, just there's got to be some inequity there, right? Because if you earn $500,000 a year, let's say arbitrarily, and you haven't bought a house for whatever reason, you could access this scheme, use bugger all deposit, and then you have so much more free capital than someone who's earning $50,000 a year to then invest in some other high yield. Plus, you've got your foot on the property ladder. I mean,
I was a little bit surprised to see that one, particularly the environment we're in, where the rich are getting richer post COVID, and the middle down are getting sort of crunched by higher interest rates, cost of living, the challenges of the economy, etc. To remove one's eligibility based on their earnings seemed like you would fuel it for people that, for whatever reason, haven't purchased a property yet but are big earners.
Yeah. Well, it just seems like there's an easy path for them to make even more money quicker than anyone else. But, the time will be the judge of how well this works out. But I'm, interested to watch the space. I think.
Well, if we can say, I'll go to Saul Eastlake, who's a respected economist. He says the scheme might help some first home buyers, but it has failed to address the underlying problems with Australia's housing system. And that is a really, really pertinent point here, is that these are all Band-Aid solutions.
Yeah.
They're not fundamentally fixing the supply-demand imbalance. We do need these 1.2 million dwellings that the federal government's promised, but I haven't
seen them. I don't know where they are.
Which is probably a good segue into our next story.
I was about to say, it's perfect time to switch over to the second thing I wanted to talk about today, Peter, which is primarily, I guess, for our listeners in the eastern suburbs. But Chris Minns has announced that he is going to complete the long dormant, partially completed Willara train station, which is, clearly a critical corridor for transport, and one that we must fill immediately. But cynicism aside, he's also said, alongside the announcement, he's going to rezone the area and use the train station as something of a hub to build 10,000 new homes, assuming high density is the only way that it can occur. If anyone knows Willara, obviously it's a very, very small suburb. I mean, given that we've just talked about...
It'll nearly triple the number of residences in Willara.
Oh, yeah. Insane change. Given that we talk about how supply is an issue, again, on the surface, this sounds like a great announcement from Chris Minns. New train station, better transport access pipelines, more houses sounds great. As someone who has spent a lot of time in the east, grew up in the area, this seems like a ridiculous spot to not only bother putting another train station, but also seems like a really unlikely position or location to complete 10,000 homes that are both done in a efficient enough time to have any impact, but also at an affordable price point. I'm really interested to get your thoughts on this whole thing, to be honest.
The price point's less of an issue. I think there might be enough people to take on these dwellings at a commercially viable price for the developers to build. What I see is something completely different to the points you've just outlined, all of which have merit. What I clearly see, the agenda here, I don't know if it's a hidden agenda or it's a open agenda, but the government don't want people to own cars.
Yeah.
What will come out next out of these 10,000 homes, here's my prediction, is the majority of them won't have car spaces.
Yeah, wouldn't be surprised.
So basically what they are doing with Sydney is they're trying to drive it to, pardon the pun, drive Sydney-siders to a point where they use the public infrastructure, the public transport that's been put in place, because you've got a new railway station here. Obviously, we've got a completely new metro system. there's massive investment in public transport that has taken place over the last 10 years and clearly will over the next 10, and they're building high density around existing metro and railway stations and new ones as is outlined here in Willara. So the takeout I get is that even if Willara could handle 10,000 new dwellings, keeping in mind that on average it's 2.5 persons per dwelling, so we're talking an extra 25,000 residents in Willara.
Yeah.
And let's say every household has a car on average, I don't see 10,000 more cars coming into Willara. That's a really congested part of town as it is at the moment. So I think you'll find that increasingly these new developments it's over public transport. You don't need a car to live here, and they'll try and market and sell that way of life.
I must admit, I don't completely mind that. I think that's perfectly reasonable, right? If you choose and have the capacity to live near the city in a high-rise apartment building, you probably don't need a car, right? But I don't know. It seems to me like in a city where we've spent years, for better or worse, expanding southwest, building the population away from the high density of the city, not building sufficient public transport routes. I acknowledge the metro is fantastic. I've ridden it in recent months. It's such a great system. I wish it was more prolific in Sydney. I think the whole city would be better for it. I don't know. I just don't see the merit or the value in spending time and money investing in a railway station in a location where there's a railway station a stone's throw away, and jamming more people into a suburb that really doesn't have the space for it. And as you say, will then only be suitable to a certain percentage of the population that either don't have a car or don't need a car or have the capacity to then travel where they need.
Well, there's always more space.
I think it's pie in the sky, right?
Well, I was just going to mention the sky. There's always space if you're prepared to go up.
Yeah.
Which clearly they are.
Yeah.
So the skyline in Sydney in 25 years will be much more condensed than what it is now.
Oh, look, and I think it needs to be. I don't think that's, whether we like it or not, I think it has to be to support the growing population.
Yeah, but let's come to that point. Who asked for the growing population? Like Chris Minns is attacking, we need to kill NIMBYism. He's been quoted elsewhere in articles I've read saying most Sydney-siders acknowledge we have to do our bit. I don't know. I must have missed a vote. When did we say that we were going to overcrowd Sydney to this degree? Former Labor Premier Bob Carr said Sydney was full 2 million people ago. And here we are with the existing Labor Premier carrying on as though he's been given a mandate to double the population of Sydney and the dwellings accordingly. Like, I just don't remember whenever there was a discussion, a debate where the people were saying, yeah, Sydney's empty. Sydney needs more people. Let's fill it up.
Labor needs more voters, Peter. That's the bottom line. I'm not optimistic this will even get done. I think he'll do the station. I'm not overly convinced that he'll get 10,000 high-rise apartments into Willara between you and I. I think Chris talks a lot and delivers very little so far. But it'd be interesting to see. I tend to disagree. With the pricing point, I think there is plenty of people that will absolutely want to live in high-rise apartments in Willara, but I cannot see them being affordable in any way, shape or form, given its proximity to the east, its proximity to the city, and then its proximity to a...
But affordable to who?
Well, that's the great question, right? If we've got a problem in Sydney at the moment that people can't get a house deposit together for their first time, then Chris coming out saying that we're going to build 10,000 affordable or homes that are more affordable in Willara, I just think that's a ridiculous statement. I mean, it's one of the most expensive suburbs in the city. I can't see how just changing the density and slow trickling some apartments is going to make it affordable for anyone. Anyone that, already can't access a house somewhere on a train line. Anyway, I'm maybe just getting focused on the wrong point, but the whole thing irks me when we've got much worse transport issues across Sydney and a lot more people moving out to then having to come all the way in and try and...
Well, he comes from a theory. Like, if you stitch all of his comments together, you get an idea of what his psychology or thought pattern to all of this is. And he says it's easier and cheaper and more productive to build above transport hubs and railway links than it is to see Sydney expanding further and further west each time we need more housing. So these were the comments that he was making as soon as he was elected just over 2 years ago.
Yeah.
So he's just following through now, and this is what it looks like: 10,000 more dwellings in Willara. I have little doubt that they will sell them.
I agree, but my point
sell
is,
them well.
my point is though, I think that is the right solution. It is cheaper, it is easier, but I just don't see 10,000 apartments in Willara being affordable. You know, who's going to buy them?
But if they sell, they're affordable.
Yeah.
If you can sell 10,000 of them and they all sell, they're affordable to someone, to 10,000 people.
Yeah, 10,000 investors who then lease them out to international students. Who knows?
Well, that's not true because investors are just skinny on the ground. See, that's another cheap soundbite that's in the media at the moment where everyone's beating up on investors. You ask any real estate agent around Sydney at the moment, investors are selling out because the regulation, the anti-landlord regulation has just been going up and up in favour of the tenant for the last 3 years to the point where they're just throwing the towel in. So our ratio of landlords selling out versus people saying, I've just bought a property or I need to rent my property out coming in, we're probably seeing a bleed at the moment of 4-1, Ciaran.
Yeah, wow.
So, you know, this cheap soundbite, when we're losing a debate in the property in the property world, let's just blame investors because they're greedy capitalists. It doesn't stack up.
Yeah.
We need more investors at the moment, not less.
Well, luckily they'll have some affordable, in inverted commas, centrally located high-rise apartments in the coming future in Willara, Peter.
Yeah, but if they don't want cats in there, the tenants are allowed to have a cat and a dog in the apartment to do who knows what in there.
Yeah.
Who wants to sign up for that?
Who knows?
Yeah.
We'll see if any of this comes to fruition. I have no doubt, given that he's been pretty firm on infrastructure, he will complete the station at the very least.
Well, he won't complete the station without the apartments because the apartments make
complement the station. That's
make
right.
the station viable.
Yeah, it'll be a luxurious 2-minute ride to the next station. Anyway, look, as we move on today, Peter, I understand there are some new inflationary figures out today, which, as always, you know, we love talking about what inflation is doing, and as always, it's a great opportunity for me to press you on whether or not you think it may influence monetary policy in the coming
I
months.
think it will, yeah. There'll be no rate cut in September on these numbers, Ciaran.
That's a shame.
And it's probably put the what most economists thought going into today, an almost certain interest rate cut in November. It's probably put that at a 50-50 at the moment. Yeah.
Okay. So what are the numbers telling us?
So they have inflation climbed to 2.8%. Its highest level since July 2024 for the month, and it was up from 1.9% for the month of June, according to the ABS.
So that's the overall inflation, not the trimmed mean?
That's correct. Yep. So the all-important trimmed mean inflation, the Reserve Bank's preferred measure, as it strips out seasonality and volatile items, came in steady at 2.7%.
Okay. So we're holding firm at least on the underlying inflation, but you know, there is some inflationary rise. Any indication in the commentary you've heard as to what may have driven that?
Electricity.
Okay.
Electricity.
Is
was
that
the big
because
one.
the government's subsidies have ended?
I believe so, because that's a noticeable jump. And some people are saying that some economists are still saying there will be a cut in November, and it's a rogue number, and it's just a sort of a recalibration, if you like.
Yep.
An outlier. Mr. Chalmers, the Treasurer, pointed to the end of the state energy rebates among fuel and travel prices for the higher than expected number. Volatile and one-off factors, including the end of state energy rebates, travel prices and fuel, were behind the increase in today's results. If you speak to anyone that owns a sort of a restaurant, cafe business at the moment, they will let you know what energy is doing to their business. It's absolutely crueling them. So Chalmers can say that it's the end to these one-off factors and we'll go back to business as usual. But the businesses that have lost those rebates will be looking to pass them straight back onto the consumer in terms of higher prices. They have to.
Yeah, I only saw might have been on Reddit actually last night. Someone had taken a photo and made some commentary about a cafe in Sydney now with a $35 big breakfast. And how, you know, the comments were just scathing about how have we got to this point. But as you say, the cost of even running a household with power and gas is through the roof. I can only imagine, keeping the burners on, gas cooking in a cafe or a restaurant long term it would be crippling, as you say.
Oh, it is crippling lots, and that's why we're seeing so many of our favourite venues sadly disappear because the cost of survival is just so high.
Yeah, it's a shame. I miss the, $10 Thai lunch you used to be able to get is now no longer $10, that's for sure.
Oh, that's right.
As we wrap up today then, Peter, it's always a good idea to run through our good friends at SQM Research and their auction clearance data. We didn't catch up last week, but I think the week before we'd seen maybe our fourth or fifth week in a row with clearance numbers, the clearance rate held above 50%. How have things gone in the last few days, and how is it correlated with what you've seen on the ground?
Yeah, look, I think the numbers that SQM are putting out are correlating with what we're seeing on the ground, which is an improving market, Ciaran. So in the last week, there were 997 auctions scheduled. That's a increase in volumes, and it had a clearance rate of 56.5%, which is, again, an increase in clearance rate. So, yeah, the market is improving. There's no two ways about that. Interestingly, we always like to highlight the spread between sold prior and sold under the hammer. Of the recorded auction successes, 281 sold prior and 282 sold under the hammer. So essentially a clean 50-50 split, which is really common, which is a really interesting sort of trend in the market, if you like. So, look, I think most real estate agents are pretty comfortable with the state of the market. The interest rates are doing their things. The media carrying stories about Sydney property prices are increasing again. I don't know if they're increasing across the board, but there are certain segments of the market that are on the front foot that are oversubscribed with buyer interest, there's no doubt. And the odd property is going well above expectations, which it always does. But the examples of properties sort of getting above expectations does seem to be increasing. That's the first, anecdotal sign to us on the ground that the market is sort of heating up. The second indicator that I always look for of a market that's sort of really coming to life is stale listings that have been hanging around on the market longer than the vendors would like. Start selling. Buyers start saying, I now see the value in that property or that apartment and I'm here to buy it. And right across the spectrum, I have seen an increase in listings that have been out there for a while that have started selling.
Yeah, interesting. My only question for you on this topic today then, Peter, we're now, as of the time of recording, we're in the last few days of winter before we head into spring. Traditionally, spring is a hot time for property. There's always an influx and a flurry of activity. Have you, just in your microcosm, have you been having conversations? Have you seen the interest changing? Are the conversations shifting amongst vendors in your sphere or in your area to indicate that there is likely to be not only the typical kind of spring flurry, but anything, particularly strong or not this year in terms of volume as we head into the warmer months?
Look, stock levels are going to go up. It's a little bit difficult to get a read on it this year, and other agents are reporting the same thing. That month of rain that we had from late July until essentially last week in Sydney.
The month from February to August, you mean? Did it stop in there?
It did, but it probably didn't feel that way. So when I look at most suburbs that we service, I would absolutely say that on-market stock levels are still subdued. There is certainly signs that they're starting to increase a bit, but they are subdued. There's no doubt about that, and I think the difficulty in getting properties ready for market contributed to that.
Yeah. Look, as always, great analysis, Peter. Some really good topics today. I hope our listeners have found it useful, and I know that I'll continue to complain about most of Chris Minns' decisions as we move forward on the podcast. But as always, my friend, I appreciate you coming in and talking with us today.
My pleasure. Thanks, Ciaran.
Thanks, Peter, and thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate. The podcast providing real estate insights you won't find anywhere else.